Hello and welcome back to the Mortgage and Protection Podcast. And this time we are continuing the conversation on mortgages for self-employed construction workers with Paul from Henchurch Lane. Thank you for joining us again, Paul. Are you ready to answer some more questions?
I am indeed. Let's go.
Okay. Also, loving the background decorations as well. First of all,
Yes.
spotted those.
So festive.
Very festive. Right, let's get straight into the rest of the questions we've got here then. So, first of all, do I need a strong credit score as a self-employed construction mortgage applicant? Can bad credit impact my ability to get a mortgage while self-employed?
Bit of a mouthful there, wasn't
It
it?
was, yeah.
So, yeah, definitely. Sorry, a good credit score definitely helps. It's not the whole story. Lenders look at other things like how reliable you are with your money. Things like missed payments and defaults obviously can affect your options. But that being said, it doesn't automatically mean that you're not going to be able to secure a mortgage. There are other lenders out there who could offer you options. That could mean that they're a little bit more expensive than the sort of high street options that you'll have. But things like having your income really well documented and having a bigger deposit if possible, those sorts of things, any positives that you can put going in your favor will help you when it comes to securing if you have got slightly or impaired credit at all.
Okay, so that's something to bear in mind then, first of all, if you're listening to this, watching this video, and that applies to you in any way. Speaking of deposits, we've got a question on that. So, what is the minimum deposit required for self employed construction workers? Does this differ?
No, you can get deposit options starting from 5%, 10%, generally across the board. I would say if you're self-employed, it tends to be the sort of 15% bracket that really does open up your options to most of the market. So, if you can aim for that, great. If you can get to 10, good. If you've only got five and it's going to be, years down the line for you to save another five, then look at your options. They might not be as many as they would be at the higher deposit amounts, but still worth looking at because it might be feasible. Again, if you've got sort of fluctuating income or your credit isn't perfect, then a larger deposit's really going to go in your favor, as we touched on previously.
Okay, well, again, yep, that's something to consider there when it comes to the deposit, but hopefully that's all useful. Let's move on to this question now. So, are there specific mortgage deals for self employed construction workers?
So there aren't mortgages labeled specifically for construction workers, but many lenders are firstly going to be happy to lend to tradespeople, and some lenders will look at the income that those types of people can earn differently. So, for argument's sakes, CIS is a construction industry scheme. They are self-employed, and some lenders will look at their self-employed income with their tax returns, but other lenders will look at their remuneration or their pay slips on a weekly or a monthly basis and almost view them as kind of employed because they pay their tax at source. So it depends on what kind of contract you're under, as to how a lender's going to view you. It's how that income is verified rather than there being specific products for the construction industry.
Right. Okay, so hopefully that explains that one there. Moving on, people would also like to know, can I apply for the shared ownership scheme as a self employed construction worker? So, any differences here?
Yeah, you can apply for the shared ownership scheme as you're self-employed. If you're self-employed, sorry, in construction workers, you're going to need to prove your income and your affordability, going back to that question before. So it would depend on how they look at that. But just because you're self-employed, it doesn't exclude you from these sorts of schemes.
Okay, which is great news. That's really
It is
positive
good
there.
news. If you're struggling to get to that sort of 100% purchase bracket, then it's a really good scheme for people that want to own something but can't quite afford the full amount. So really, really good product to bridge that gap.
Yeah, definitely. Okay, we're getting through these questions. So the next one asks, should I go for a fixed rate or variable mortgage as a self employed construction worker?
I mean, that really is going to be down for each individual specific circumstances. A lot of self-employed people I tend to find prefer fixed rates just because their income can potentially be fluctuating and they want that certainty.
Mm.
But there's nothing stopping self-employed people taking variable or tracker rates. It really just depends on what the idea or the thought process is behind it, which you'll be able to go through with your broker and sort of go into detail about how each option would be beneficial for your particular circumstances, I'd say.
Mm. Okay, which makes sense there. Now, the next question here asks, can I combine my self-employed income with my partner's income?
Yes, absolutely. If you're applying jointly to purchase a property, then lenders are going to add both those incomes together and help you increase your borrowing potential. So if your partner is employed, that again is going to be helpful. If you're self-employed and there's that element of uncertainty around that, it's going to bolster the application by adding an employed applicant with a permanent income.
Which again is good news. I'm saying that a lot.
There we go.
Right. Can I use income then from subcontracting, PAYE work, or side jobs people would like to know?
Yeah, you can. So there's a lot of people, especially in construction, that might have a mix of income. They might have a bit of PAYE. They might do a bit of subcontracting. They could even do a bit of private work. I suppose the key is when any employed or self-employed income is the fact that it's being declared. So when you say side jobs, as long as that's not cash in hand, as long as it has been declared to the HMRC one way or the other and you've paid tax on it, we can use it towards an application.
Okay, so something to note there.
Yeah.
Right. Any top tips here? So, how can I improve my chances of getting approved for a mortgage?
So with self-employed people, it's always a difficulty when it comes to obtaining the evidence, I suppose, to get your income verified. So I'd say keeping your accounts up to date, making sure that your tax returns are filed and as accurate as possible. Avoid missed payments. So we we're touching on the credit situation earlier on. If you've got any missed or late payments, that can make things a little bit more difficult. And again, we always go back to the deposit, don't we? The bigger the deposit, the better. So those four things I would say are the main points. And lastly, if you're in the construction industry, if you are self-employed, then it can make a big difference speaking to a broker who is versed within that area versus someone who isn't as experienced for self-employed and construction candidates. So yeah, those are my top tips, I would say.
Okay, brilliant. There we go. So, how long then does the mortgage process take for self-employed construction applicants? Again, any differences here for any reason?
Yeah, again, the average is sort of 6 to 10 weeks. We work a lot quicker than that because this is our bread and butter, but also we don't submit applications before we've got all of the details and the documents to hand. A
Right.
lot of brokers would potentially put the application in and wait to hear back from the underwriters to see what they need, then ask the client, and the applicant might not even have the documents, have to submit a tax return, and
Right.
it can really drag its heels. So if you've got all of your ducks in a row, it can be done very quickly. And if you haven't, it's going to be drawn out a little bit longer because you're not just giving someone three pay slips, you're giving someone potentially 3 years worth of income history.
Okay, so preparation is key. We say that all the
Yes,
time, don't we?
we do.
Okay, so three questions left then. What are the most common reasons for rejection?
Probably the reverse of those tips that we spoke
Yeah.
about, right? So unclear income, bad credit, missing payments, things like that, not enough deposit or inconsistent earnings without any real explanation behind it. So yeah, the opposite, or using a bad broker. Um, that the five in reverse. So
Mm.
if you look at those five top tips, if you stick to those, the likelihood of you getting declined is very slim.
Okay, a good way of looking at it there. There we go. So, can I remortgage or get a buy-to-let mortgage as a self-employed construction worker? Again, any differences? A lot of those types of questions here.
Yeah, there aren't really, in all honesty, if you're remortgaging, if you're purchasing, if you're buying an investment property, they're generally going to be viewed in a similar manner. The fact that you're self-employed will come with the consistent differences across the board, but it doesn't exclude you from investing in property or remortgaging at all.
which is great news. And just lastly, we always like to end on this note, but you have demonstrated this. How
I
can
think I have.
you have? How can a mortgage broker help? Anything else to add? Any final thoughts?
Construction industry.
Hmm.
Hmm.
You've covered a lot there. We have
We
covered a lot.
have, yeah, and you know what? I think that's really in detail as well. So anything you need to know about what we can offer is generally going to be in those answers.
Yeah.
But yeah, it is. It's a specific. They're a quirky little bunch within the mortgage industry because they're one of the only sorts of groups of people that can be viewed as self-employed and as employed, depending on what lender you go with. So
Mm.
that can make a huge difference on how much income you put towards the application, and therefore the outcome or the maximum loan size can be dramatically different. So it's worth making sure that you've spoken to someone who kind of knows what they're talking about.
Okay, well, there we go. We'll end there then. Thank you for that, Paul. Hopefully, that has all proved useful there across our part one and part two episodes as well. You
Yeah.
can go back and listen to part one if you haven't already. But we'll catch you on the next episode.
See you later, Tessa.
Bye.